right, y'all. Wealth on Wednesday. Wealth on Wednesday, and we're talking about it. How to get over 20% in dividend yield from a single BDC. Come on, man. What are we talking about? We're talking about Horizon and Horizon HRZN. Horizon as a company that delivers, right? As a company that delivers on its goal, right? I would say you could get a heavy chunk of money from a company, an ETF rather, BISD, right? They actually put out a nice setup, but their expense ratio is just too much. Their expense ratio offsets what they're doing. So as far as business development corporations, I'm sticking with Horizon right now, among a few other distributors. Why? Look at this, man. This is simple. Horizon offers something that many other business development corporations do not offer. Horizon is a business development corporation that is focused on technology. What do I mean by that? When I say technology, I'm talking about a company that invests primarily in the United States, right? And most of that investment is focused in key industries that are moving towards the future of the U.S. Technology, life science, healthcare, information and services, clean tech, and sustainable industries. That's what I'm talking about. And Horizon has an annual dividend of $1.32 per share, which brings it to a yield of 20.06%. 20.06%. And so they're looking at the overall technology industry in the U.S. for potential growth and sustainability. And as a business development corporation, they're putting their investment, they're doing their lending in these companies that are in the developmental stages, right? And so these are companies that may have already passed the first round of funding, but they're definitely companies that are looking for more investment to go further in their development of products, services, and overall infrastructure. And so what I like about Horizon is this. Just yesterday was the ex-dividend for Horizon. I'm looking at it right here, February 17th. And if you're holding it, you got another payment coming your way. And that payment is going to hit, it's going to hit, and you're going to take it into your account, hopefully reinvest it into Horizon and see it do some more stuff. The issue is, can you see Horizon being a key investment for you? Can you see Horizon being a key investment for you? And at 20% yield, right? It doesn't have to take over, right? The sticker is selling for $6.58, right? It doesn't have to take over for you, but by the time we get to the middle of March 13th, that payday will come, and you reinvest that That'll stack up continuously because this thing pays monthly. This thing pays monthly, like some other BDCs that we know. And so I'm juiced about Horizon. I own Horizon in at least two of my taxable accounts, and I say that because Horizon is part of a income structured portfolio that I've been developing to kick off anywhere between 10 to 12% average yield. And now with its price dropping, Horizon has hit at a level to where many analysts are saying hold, and I'm still in the accumulation stage. And I'm accumulating more now because not just for the higher yield, but I'm accumulating more now because it remains a consistent player. As far as it reaching this forecasted $7 and change, great. I wouldn't mind if it did it next year, and I wouldn't mind if it did it in 3 years. You know why? Because I'm not investing in this one for growth. This one's just purely income. Purely income. I mean, steady income from it, and that's my avenue. Look at it. The yield and dividend growth are negative, right? But this thing is marked out in the right territory, technology. And if we looked at it properly, if I was investing in a tech ETF or a tech mutual fund, I'd be paying a high expense ratio and paying for management to select stocks and companies that they think could benefit from it or grow from it. But I'm going to go with these guys are the angel investors for technology, life science, clean energy. That's broad enough for me. If I have this combined with some of my Global X investments, I'm cool. I'm cool because this is going to give me enough in the long run to provide the income that I'm looking for this particular portfolio. This particular portfolio that I'm trying to fulfill gets me in a position to where I can balance out my long-term stock investments along with my primary income, BDCs, REITs, mortgage ETFs, preferred ETFs, laddered I-bond ETFs. All that's right there. And throw that in with a couple of Wisdom Tree and a few other dividend ETFs, and I'll shut up. I'll shut up and keep it rolling for the next 10 to 15 years. And then repackage it, rebundle it into even safer diversification and shut it down. Just coast that thing into retirement. But right now, I'm digging in and I'm picking it up. I'm picking it up at $6.50. Come on, man. $6.50, and it's kicking out 20%. You're not getting a lot of investments like this. And how long will it do this? I'm not sure. But then again, that's why we invest. That's why we take the risk. If you can't stomach the ups and downs, the ebbs and flows of it, buy a balanced fund and shut up. Buy a balanced fund and a S&P 500 index fund or total market index ETF and shut up. I mean, that's what I do for my retirement account. I'm not jumping over here hanging off a cliff, 10 toes down, trying to figure out how to generate, 10, 12% income in a retirement account. No. Take the S&P 500, total stock market, a little bit of international, a lot of bonds, and I sit back and ride that thing out. I bonds. That's it. But as far as taxable portfolio that I may need to offset some medical bills later on in life, yeah, give me 10, 12%. Give me CDs kicking off 3, 4%. If I can find one at 5%, I'll take it. Give me a high yield savings account, 4%, I'll take it. That's what I'm aiming for. In that lane, in order to do the things that I need to do for me. What you need to do for you is evaluate what can you tolerate, and then what's your target. What can you tolerate and what's your target? And once you evaluate what you can tolerate and what's your target, now how do you begin to fill in the gaps of assets to create an allocation that is befitting of where you want to go? Taking a while to get there, taking some learning to get there, but I'm definitely not doing it with all the dials of the dog. And I'm definitely not doing it with all dividend aristocrats. 4% is just not going to get me there every quarter. I need some things to juice that up and boost that up between those quarterly payments. And that's why I love digging into Horizon and some other companies where I can get that return. I'm the same way with Ford. Ford, I'm digging in. And I'm just popping into that thing. I'm popping that thing like Advil. Ford is going to continue to be a key holding of mine across multiple portfolios, no matter what, because what? It'll teeter between 4.5% to 6%, no matter what. Verizon, same thing. The Verizon's in 2 or 3 places. Cool. But I'm not doing that with Dow Chemical. I'm not doing that with Johnson & Johnson, right? It's just the way I approach it. And so, yeah, there may be a few years from now where I'm done accumulating and just aggregating and allocating. But right now, I'm still pushing in and leaning in and picking up all the pieces I need in order to generate that 10% to 12%, even 15% in my income portfolios in order to satisfactorily say, hey, okay, I can take this as a average monthly yield on my investment and keep cracking. If I can get 6% right now on a preferred ETF like PGX, I'm rocking. I'm rocking and rolling. And so if that's the case, let me offset it with this. Why did I not recommend BISD? Why did I not recommend BISD? Let me just say it like this. When the yield on BISD is 12% and the expense ratio on BISD is 12%, you're gaining nothing. You're gaining nothing. And so looking at the ETF and the key factors of the ETF, the basics of the ETF, that proves that I don't need to buy into that ETF right now. And so rather than buying into that ETF, I'm buying the BDC Horizon, and I'm taking that down the road until it shows me different. Until it does differently by me, that's what I'm taking. Hey, hope this has worked out for you. Hope this makes sense to you. We're not here to do a whole lot of arguing and debating. We're just here to talk about what makes it happen. When we talk about what makes it happen, we're talking about wealth on Wednesday. You don't have to overwork to become rich. That's what the Bible says. You don't have to overwork to become rich. But what you do need to do, you do need to find a place where finances fit into your faith and work on a plan and a portfolio to where you don't die broke. God bless. God be with you. Peace, love, and happiness.